Bitcoin just got slapped back down hard. It tried to push past 71,150 and failed. Millions of dollars in leveraged longs, liquidated overnight, over $220 million wiped out in 24 hours. But here's the thing nobody's talking about. While Bitcoin bled, a completely different sector of crypto is going absolutely parabolic right now. AI tokens are lighting up the charts, and the reason why is connected to a war, an Nvidia CEO, and a Korean exchange listing that sent one token flying 8% in a single morning. I'm Asian Guy. Welcome to Asian Bitcoin Guy. Let's get into it. The full news, breakdown, Bitcoin, war and market context. All right, guys, let's break down exactly what is happening in the crypto markets right now because there is a lot going on, and most of it connects back to one single thing: geopolitical uncertainty. Bitcoin's price action, what really happened. So Bitcoin entered this week with some serious momentum. Bulls were excited, retail was buying, and we had a clean push towards 71,750. That was the key level everyone was watching. And then, rejection. As of this morning, Bitcoin is trading around $69,500, down about 0.5% in the past 24 hours. Now, 0.55% doesn't sound dramatic, right? The price action right now is completely controlled by macro uncertainty. Specifically, the US-Israel war with Iran. This conflict has been ongoing, and on Tuesday, US President Donald Trump made some conflicting comments about it, sending mixed signals to markets. Traders don't like confusion. When traders don't like confusion, they sell risk assets. And Bitcoin is still considered a risk asset by institutional traders. So while gold and the US dollar barely moved, crypto took a hit. Oil is going crazy. And it matters for crypto. Now, here's something that most crypto YouTubers won't connect for you. Oil prices are directly impacting crypto sentiment right now. Oil dropped to as low as $81 per barrel on Tuesday before bouncing back to $89 during the European session on Wednesday. That kind of volatility in oil markets signals one thing: the war premium in global markets is not going away. When oil is volatile, institutional investors get nervous. When institutional investors get nervous, they reduce exposure to high-risk assets first, and crypto is always on that list. This is the macro environment we are operating in right now. It's not pretty, but it's real. And on this channel, we deal in reality. Altcoins getting hit. Hard Bitcoin losing 0.5% is actually mild compared to what happened in the altcoin market. Zcash, Zeek, down 4.5%. Aave, AAVE, down 2.1%. Curve and CRV, down a brutal 6.5%. Jupiter, JUP, also down 6.5%. DeFi tokens in particular are getting crushed right now. The market is rotating out of speculative DeFi and into, well, because there is one corner of the market that is absolutely on fire. One positive signal: fear and greed index. Before we move on, I want to highlight one piece of data that is actually encouraging. The crypto fear and greed index just moved from extreme fear into simply fear, sitting at 25 out of 100. That might not sound exciting, but here's the context. We have been stuck in extreme fear for over a month. This is the first upward tick in sentiment in a very long time. And here's the kicker. The reason sentiment is improving slightly is because Bitcoin and the broader crypto market have actually been outperforming gold and US equities since March 1st. Even in a war environment, crypto is holding relatively well. That is a subtle but important signal of resilience. Derivatives. Deep dive. What the smart money is doing. Now let's talk about what the smart money is doing, because if you only watch price, you're missing half the picture. I'm going to walk you through the derivatives data right now, and this is where things get really interesting. $220 million in liquidations. In the past 24 hours, over $220 million worth of crypto futures positions have been liquidated. The majority of those were long positions, meaning people were betting Bitcoin would go up, they used leverage, and they got destroyed when it dropped. This is what happens when price fails to hold above a key level like $70,000 with conviction. Leveraged longs become a liability and the market forces them out. Open interest is falling, but not in the way you think. Here's something nuanced that I want you to understand. Open interest, OI, in Bitcoin futures on major exchanges dropped from 233,000 BTC to 226,000 BTC. That's a decline. But, and this is crucial, the way that open interest declined tells us something important. When OI drops during a price decline, that usually means traders are closing long positions. They're capitulating, giving up, exiting the market. What we are not seeing is a massive wave of new short positions being opened. Traders aren't aggressively betting on further downside. That means the market hasn't flipped to full bearish conviction yet. Bears exist, but they aren't piling in with confidence either. The same pattern is playing out in Solana, SOL, and Ethereum. ETH futures. XRP futures are surging. There is one notable exception to the declining OI trend, XRP. XRP futures open interest just hit 1.74 billion tokens, the highest level since February 23rd. Activity in XRP is actually growing while the rest of the market cools down. This is worth watching closely. Institutional appetite is weak. Let's be honest about one uncomfortable truth right now. On the CME, which is where institutional investors trade regulated crypto futures, Bitcoin futures open interest has dropped to $7.39 billion. That is the lowest level since September 2024. ETH futures on CME are also sharply lower. Institutions are not excited about Bitcoin right now. They are sitting on the sidelines, watching the Iran situation unfold before deploying capital. Volatility is about to pick up. Here is the most technically interesting signal I want to leave you with from the derivatives section. Bitcoin's 30-day implied volatility index, BVIV, has been falling for 3 straight days. Normally that sounds bearish or boring. But here's the twist. The 50-day, 100-day, and 200-day volatility averages are now stacked one above the other in order. In technical analysis, that's a bullish stacking pattern. It historically precedes a volatility expansion. Translation? Something big is coming. A major move up or down is likely on the horizon. Wall Street's own VIX volatility index is also elevated at 26%, up 4%. And when traditional markets get volatile, it spills into crypto. Big moves are coming. The question is, which direction? And the answer might lie in what AI tokens are doing right now. The AI token explosion. The real story of today. Okay. This is the part of the video you probably didn't see covered properly anywhere else today. Because while everyone was talking about Bitcoin's rejection and the war, AI tokens went absolutely crazy. Let me break down exactly what happened and why it matters. Internet Computer, ICP, up 8% overnight. Internet Computer, ICP, is the biggest story in crypto today outside of Bitcoin. It jumped over 8%, and the catalyst was a single event. ICP got listed on Upbit, the largest cryptocurrency exchange in South Korea. Now, you might think a listing is just a listing, but Upbit is not just any exchange. Upbit is the gateway to Korean retail crypto investors. And Korean retail is one of the most passionate, high-volume trading communities on the planet. The numbers prove it. ICP's daily trading volume shot from $65 million to $267 million after the listing. That is a 4x increase in volume in a single day. That kind of volume doesn't happen by accident. That is a retail frenzy in real time. This is the classic exchange listing effect, a well-known phenomenon where a token gets listed on a major exchange and retail investors flood in. The Upbit listing specifically is powerful because Korean investors have historically driven some of the most aggressive short-term price action in crypto history. FET, Fetch.ai, up 6% on Nvidia. CEO comments. The second major AI token mover today is FET, Fetch.ai, up 6% in the past 24 hours. And the reason? Nvidia CEO Jensen Huang published a rare blog post in which he described AI as an industrial build-out comparable to electrification, the same technological revolution that powered the entire 20th century economy. That is not a small comparison. Jensen Huang is not an influencer making hype posts. He's the CEO of the most important hardware company in the AI revolution, a man whose words move billion-dollar investment decisions. When the most powerful person in AI infrastructure says AI is as important as electricity, AI tokens go up. Simple cause and effect. Why AI tokens are outperforming. Let me give you some real analysis here because this is important for your portfolio thinking. We are in a market environment right now characterized by geopolitical fear, Iran war, institutional hesitation, CME OI hit September 2024 lows, DeFi weakness, CRV, JUP down 6.5%. In this environment, narrative matters more than fundamentals in the short term. And right now, the strongest narrative in all of technology, crypto or traditional, is artificial intelligence. When Jensen Huang speaks, capital flows. When a major exchange like Upbit lists an AI token, retail follows. AI is the one sector that can attract fresh capital even when the broader market is fearful. This is why smart traders watch narrative rotation. The money doesn't disappear, it moves. And right now, it's moving into AI. If you are holding AI-related tokens with strong fundamentals, today's action is a reminder of why that thesis has legs, even in a bear-leaning macro environment. One caution, don't chase. I want to be responsible here because on this channel, we give you the full picture. ICP is up 8%, FET is up 6%. Those are already big moves. Do not chase green candles without a plan. Volume-driven pumps from exchange listings are often followed by a sell the news correction once the initial retail excitement fades. If you miss the move, wait for a pullback and reevaluate. Chasing pumps is how people lose money even when they're right about the narrative. What to watch? Final analysis. All right, guys, let me bring it all together for you. Here's what you need to be watching in the coming days. Key levels to watch Bitcoin. The level that matters is 71,750. That was the rejection point. If Bitcoin can break and close above 71,750 with conviction, the bull thesis is back on. Below $68,000, we're looking at potential for a deeper pullback towards $65,000. Ethereum and Solana both are following Bitcoin's lead. OI is declining, but not bearishly. Watch for a macro catalyst to give these direction. XRP. Open interest is growing. Something is happening here. Keep it on your watch list. AI tokens. ICP, FET. Short-term momentum is strong, but be cautious of post-listing corrections. The medium-term narrative remains bullish on AI. The macro wildcard. Everything in this market right now has a war premium attached to it. The Iran conflict is the single biggest variable that no chart can predict. If the situation escalates, oil spikes, risk assets dump, Bitcoin drops. If there is a ceasefire or de-escalation, capital that has been sitting on the sidelines floods back in. Watch the geopolitical headlines as closely as you watch the charts. Right now, they matter more. The volatility signal. I mentioned earlier that Bitcoin's volatility averages are stacking bullishly. The VIX is elevated. Big moves are coming across all markets. Position sizing is everything right now. This is not a market to be over-leveraged in, as $220 million in liquidations. Today should remind us, look, I started this channel because I was frustrated with crypto content that was either pure hype with no substance, or so technical it was impossible to understand. My mission with Asian Bitcoin Guy is simple. Real news, real analysis, no spam, no shilling, no BS. Today's market is complicated. There's a war, there's liquidations, there's AI tokens pumping, there's volatility signals flashing. But if you watch this channel regularly, you will always know exactly what is happening and why, before most people figure it out.